Hey, it's John here, and in this Forex Trading for Beginners video series, I'm going to show you the quickest, easiest, and safest way on how to get started with Forex trading, with making your very first profitable trade to winning consistently in 2019 with one super simple strategy that anyone can follow. But first, let me give you a word of warning. Forex trading can potentially wipe out your entire capital, savings, and even destroy your life if you are not careful. But you know that already. So if anyone, any guru, or any so-called expert tell you that Forex trading is an easy peasy way of making $1 million by this time next week, then please do yourself a favor and run in the opposite direction. Even billionaire investors and traders like Jim Rogers and Paul Tudor Jones will never say that trading is easy, so why should you ever think so? Fortunately, there are many proven strategies that you can follow to start making money and build up your wealth, as I'll show you later in the video. Okay, now let's lay the groundwork for your Forex trading success. So first things first. To start trading, you will need an online trading platform. I've been using Owenda for many years now and I highly recommend them because their platform is excellent. And they also have an awesome mobile trading application which allows you to trade anytime, anywhere. You can also start trading with any amount of funds with them, even a few $100s. So, once you have funded your account, you can immediately start trading. But with that said, feel free to check out other trading platforms before you make a decision. Now, speaking of Forex trading platforms, many companies like Owenda offer free trading simulators, or also known as demo accounts, where you can practice without using real money. And this is especially useful because it allows you to get used to that trading platform before you actually do live trading. Okay, now one of the most common questions that beginners have is, should you trade on a simulator first before doing live trading? In other words, is it better for you to trade on a trading simulator to the point where you are consistently profitable before moving on to live trading? Or is it better to jump right into live trading with real money? Well, the answer is it depends on who you ask. Now, both ways can work for different people, but I advise beginners to jump right into live trading because a simulator just can't give you that feeling of trading with real money. Instead, it might give you a false sense of confidence. That's why there are many traders who, after trading profitably for months and even years on a simulator, they suddenly get thrown off balance and lose money when they do live trading. Because in live trading, it's an entirely different ballgame. Your emotions come into play, your heart beats faster, and you learn to deal with winning and losing real money. That's why a simulator just can't prepare you for the emotional ups and downs of live trading. Now, with that said, it doesn't mean that you should just go and start trading live with a huge amount of real money, because that would be foolish. As a Forex trading beginner, what's important is not how much money you make, but that you're able to profit consistently in the first place. This means that you should only trade with a small amount of money to begin with, for example, $1, $5, $10, so that even if you win or lose that money, it doesn't affect your emotion and yet you gain a positive learning experience. And then, once you get the hang of live trading, once you're able to profit consistently, then you can increase the amount that you trade. So the lesson is this: when you're new to trading, start small and only with money you can afford to lose. Okay, now once you have gotten familiar with your trading platform, then it is time to look at the two different styles of trading that allows Forex traders to forecast where the price of currencies are heading. Basically, traders rely on technical analysis and fundamental analysis. What's the difference? Well, the answer is simple. Traders who use technical analysis base their trading decisions on what they see on their charts. For example, What can you see in the picture below? Yup, you can see lines, curves, candlesticks, indicators and so on, which are all part of technical analysis. On the other hand, fundamental analysis takes into consideration the news, economic data, and political events among other factors to predict currency prices. So here's the thing. Since trading based on fundamentals require knowledge of economics, finance and other areas, it is not exactly beginner friendly. Which is the reason why technical analysis is the most suitable way for new traders to profit from Forex trading. Okay, so now that you're ready to become a successful Forex trader, you may be wondering what are simple yet highly effective strategies you can use to start making profitable trades. The truth is there are many, but in this video I'll share with you one that is simple enough to get you started. Now, as simple as this setup is, know that it is effective only when used in conjunction with other high probability setups. Okay, so this simple setup is a candlestick formation known as the inside bar. This is a picture of the inside bar setup, and the way it works is simple. When you see an inside bar pattern forming on your chart, with the little bar on the right completely covered from top to bottom by the longer bar on the left, then watch for the third bar forming. As soon as the third bar passes the high or low of the inside bar, you enter the trade and place a stop loss accordingly. Thereafter, you simply let your trade run towards your target and that's it. Now let's take a look at one example. On the USD Canadian dollar chart here, we can see the inside bar pattern as I've circled in yellow. Now look what happens next. Look at the third bar. As soon as it crossed the high of the inside bar, the price went all the way up. This is how the inside bar pattern can tell you when it is time to enter a trade. Okay, let's look at another example. This time we will see a very recent example of the inside bar pattern on the USD Japanese yen currency pair. As I've circled in yellow once again, the first bar completely engulfs the second bar, which means that this is an inside bar pattern. Now look at the third bar. When it plunged below the inside bar, whoosh, it went all the way down for plenty of profits. Easy to understand, right? Okay, now just to make sure that you are able to easily spot an inside bar pattern even with your eyes closed, let's take a look at one more example. Okay, so once again we have the inside bar pattern which consists of the two bars circled in yellow. You can see that the first bar is green and the second bar is red. Next, tell me what happened on the third bar. That's right, it went down below the second bar and whoosh, it proceeded to plunge all the way down. So this is how you trade with the inside bar pattern. You look at the third bar and whichever direction it breaks, up or down, you buy or sell accordingly. Very simple. But of course, one thing to note is that, as I mentioned earlier, it is best to use the inside bar pattern when combined with other high probability setups. This way, you can greatly increase the probability of a successful trade. So this inside bar pattern is a really simple way for you to get a taste of exactly when to enter a profitable trade in Forex trading. Okay, cool. So that's it for today's lesson. Just to recap, we talked about how you can get started with Forex trading today. We also covered the importance of not getting attached to trading with a simulator when you're starting out, because it can give you a false sense of confidence. You also learn why it is important to start small and to trade only with money you can afford to lose. Then, we introduced the two main styles of trading, which are technical analysis and fundamental analysis. And last but not least, I reviewed one of the simplest methods that Forex traders of any level can use to profit. So that's it for today's lesson. If you like this video, make sure to subscribe to my channel right now, so you don't miss out on more Forex trading tips, techniques and strategies like this one. Also, ever since I started this Forex trading YouTube channel, I've been getting a lot of requests from aspiring traders from all over the world. From the US, Malaysia, China, even South Africa, who would like one-on-one coaching so that they are able to start living an independent lifestyle as a Forex trader. Now, some of those who have contacted me want to get into Forex trading full-time, while others simply want to make enough income in their spare time to support their family. So, if this is something you are interested in, I've provided a link in the description below where you can get in touch with me. And as always, trade safe and I'll see you in the next video.